Hello everyone, welcome to the Ichimoku daily analysis for the SP 500 for Tuesday, June 30th. Well, a negative day for the market today, and we can see that we had a red candle, a red-bodied candle. That means that the bears have made net progress on the day, so it's essentially a bearish candle. Now, if we look at where the market closed, it closed in the middle of the range. So even though the bears have made net progress for trading on the day, the market is closed with neither the bulls nor the bears in control. So quite obviously, if we look at the character of the previous candles in this first time frame uptrend, each of these candles was green except for the doji there. So we had net bullishness as the market was trending up. And if we look at the size of the bodies, they were small, then got very large, and then small, and a fairly small body again, and now another small red body. So a change of character for this market. Now, we don't have a new first time frame downtrend at the moment. We actually have, in bar chart terms, an outside day, and that's where the high of the current bar is above the previous and the low is below the previous. So it means that the bulls have been strong enough to push the market up to a new high, but the bears were strong enough to push the market down to a new low. But as we said, the bears weren't strong enough to close the market down near the low. The market is closed in the middle of the range. So a lot of indecision in this market at the moment. Certainly the bulls have lost the potential that they had to trade the market up anywhere into this zone. Now we can see the small shadow or the wick on top of the candle represents selling, and when the market traded to exactly at that level of resistance that we identified previously, the market sold off. So it's what we would have expected to do. So we might expect that we will get a new first time frame downtrend. We need to watch the low of the current candle and see if the market trades down to this area, and we should expect that the top of the cloud here should hold as support. Now that will coincide with this swing low in this region. If the top of the cloud doesn't hold as support, then we have this area here, which was the swing lows of the descending triangle. That should hold as support if the market does trade down into there. So what we need to do is watch. If the market trades down around this area, we need to look for bullishness coming into the market. Now, just looking at the Ichimoku indicators, if we look at the cloud, we're trading up above the cloud. The cloud has twisted quite some time ago, so we have a positive bias to the market, and we're trading up above the cloud. So the market has a net bullish bias to it. Looking at our other indicators, the Tenkan-sen and the Kijun-sen, the Tenkan-sen is now pointing up, which means that the market has some very short-term upside momentum, but the angle of that line is very shallow, so it means that the momentum isn't very strong. It's almost pointing sideways as well. The same for the Kijun-sen, so a very, very slight angle there. Now, the Tenkan-sen is below the Kijun-sen, which is not positive. That gives us some sort of a bearish indication. So we're getting mixed signals from our Ichimoku indicators, and even though we'd like to see the market give us bullish signals if we're trading up above the cloud or the Kumo, we're not getting that from the Kijun-sen and the Tenkan-sen. Now, we're trading up above the Tenkan-sen, which is a short-term positive for the market, and we're just trading at or around the Kijun-sen, which means that the market is neutral. So for the time being, I'd expect that we'll get a new first time frame downtrend. The market will possibly trend down to the top of the cloud and to around this support level, which is roughly around 890.